Right. Thank you all for joining us today. We're delighted to have Bob Rabuck here with Newtek Bank. He's the Senior Vice President, as Senior Vice President on the Credit Committee, and he has been in banking for over 40 years, Bob. It's been a
Hard to
journey.
believe, but yeah, the gray hair is a dead giveaway.
Well, we're excited to have someone who's seen all aspects of lending, like yourself, along the way. So thank you for joining us. I have a couple slides over on Village Wealth that we'll go through before we get started and jump into the content. So if you're new to Village Wealth, welcome. My name's Liz McRae. I'm a co-founder of Village Wealth, and you are attending our Friday speaker series. If you're new to learning about us, we are a deal management platform built for buyers. We work with a tremendous amount of first-time buyers. We have over 60,000 deals in our marketplace. We have a proprietary marketplace where M&A advisors and brokers can private message our buyers. So if you're set up on Village Wealth and have a profile from time to time, brokers can private message you and send you deals directly to your inbox. So be sure that you've got a completed profile set up in Village Wealth. We have a deal management dashboard where you can organize and store all of the listings that you're overseeing. You can invite members of your team if you're a duo, and you can share dashboards and access there. We've built in AI analysis and deal structuring tools, financial calculators, so you can help understand if a deal that you're looking at is bankable and ready to move forward. So we've got lots of fun tools in the system, and we are working closely with ETA accelerators, incubators. We work with ETA communities to provide them with our software. We work with lenders and investors as well, and brokers and M&A advisors. So if you're in any one of these categories, please feel free to reach out to us. We'd love to chat. If you have not jumped on Village Wealth and given it a try, we have a 2-week free trial. So you can just click on the Get Started for Free button on Village Wealth. Watch the spelling, Village Wealth, WELLTH.com, and you can try the software for free. So feel free to write in the chat where you are joining from. We love to hear where people are tuning in from and what role you're playing. It's always helpful for Bob to understand if you're a buyer or an advisor and what perspective you're bringing to the table. Feel free to throw in your search criteria, even what you're looking for. It's always helpful. I'm going to go over a brief introduction of Bob, and then he's going to give us a short presentation today, and then we'll lead into discussion. So we'll ask you to hold your questions until the end, or you can feel free to put them in the chat as we go so that they don't get lost, and we'll address them at the end once Bob's wrapped up. I also do want to mention that Bob is joining us from a US lender, and so we do have lots of Canadians on the line here. Underwriting works similarly in Canadian institutions, so what Bob is going to be sharing with you today is relevant in the Canadian market today as well, with the exception of the SBA loan. We don't have that in Canada, but most of what he's going to discuss today is relevant for Canadians as well. All right, I'm going to stop sharing my screen here for a moment and pass it over to you, Bob, as I set up your introduction.
Okay.
So, bear with me. So, with over 40 years of experience in banking and lending, Bob has deep expertise across traditional banking, commercial lending, and SBA financing. He has held senior roles including branch manager, regional commercial loan officer, and district manager before transitioning into non-SBA, non-bank SBA space to help and scale one of the largest SBA lenders in the country. Today, he serves as credit committee member at Newtek Bank, reviewing and approving loans ranging from 50,000 to 15 million across both SBA and non-SBA structures. So conversations with searchers that we have on a daily basis tend to ebb and flow between, what is SBA compatible and what is not. And so there's lots of questions around, what fits in what box. So we're happy to have Bob here to walk us through what that landscape looks like. Go ahead, Bob, take it away.
Right. Well, thank, thank, thanks for having me, and I appreciate you taking some time out of your day to learn some more about not just business acquisitions, but how do you go about one of the biggest challenges is getting financing for that acquisition, right? So I'm going to talk about acquisitions in a generic sense, and then also get a little more granular and talk a little bit about why you should use Newtek. Right. So who is Newtek? We're the second largest SBA lender in the country. We're a branchless internet bank, and we offer both SBA loans as well as non-SBA loans, which is important. We'll get into that in a little bit later. And we lend nationwide. So it's not like we just lend in the state of Florida or in the state of New York. We lend nationwide for acquisition loans from, I say 250, but probably even going down as low as 100,000 all the way up to 15 million. Now, SBA financing is predominantly the most popular option to use to buy a business. Now, why is that? All right. Now I'm going to give you a little bit more, and everybody will have access to this PowerPoint, so you don't have to take notes or anything. I have to give you a little history, share with you a little bit more about SBA than more than you'll ever want to know for sure. But the ultimate mission or purpose behind the SBA, Small Business Administration, is to preserve the borrower's working capital. Right? Now, how they do that is predominantly two areas. One is injections, and the other is repayment terms. Back in the day, and I'm talking early 80s and before, banks were notorious for the old expression, they only lend money to the people that don't need it. Right? You had to be in business for over 10 years, and you had to have years of profitability. Even then, if they were buying a piece of equipment or if they were buying something, they had to put 25% down. And even if they got the loan, they had to pay it back over 3 years. Well, who could afford that? That eliminated a lot of small businesses out of that metric. So what the SBA created was this program where it encouraged the banks to be less conservative if they followed this program. And by doing so, the government would guarantee, should the loan default, the government would guarantee 75% of the balance of the loan. Now, a guarantee doesn't make a bad loan good, but it helps push the deal over the top. Right? So historically, when Newtek was founded in the late 90s, we were strictly a non-bank lender. Now, what is a non-bank lender? So when the SBA created this program, it was intended to help the banks make some loans that they ordinarily wouldn't. It succeeded to some degree, but not to the degree that the government wanted. And the reason for that is banks take deposits, right? Because of that, they're regulated, FDIC, Federal Reserve, and so on. So in one respect, the government's saying loosen up and make more loans, but on the other respect, you got the regulators saying you got to control the quality of your portfolio and protect those deposits. So to deal with that challenge, they created what's called a non-bank license. There's only 17 to this day. There's only 17 lenders that have a non-bank license that only allows them to make SBA loans. They're not allowed to take deposits, and because they don't take deposits, they don't have to deal with that regulatory issue. Therefore, they're able to maximize the attributes of the SBA program, and that's where Newtek came in. We were the second largest SBA lender, strictly as in the non-bank space, competing with the big banks, Bank of America, Chase, Wells, and so on. A few years ago, we bought a bank out of New York, so now we are allowed to take deposits, but we still rely on our non-bank routes to do what we do. So how does that apply to you for business acquisition? SBA only requires a 10% injection when you buy another business. Whether you're buying it, if you're buying it individually, whether you have a business buying the business, it's only a 10% requirement. To this day, I'm telling you, to this day, a traditional bank, even if they go the SBA route, a lot of those banks are looking for a 20 or 25% injection. And again, even if you can make that injection, it lowers your working capital, right? And again, the mission behind SBA, preserve that working capital. So they only require 10%. Furthermore, SBA allows a seller note as a means to fund half of that 10%. They you still have to, the buyer still has to put in 5%, but the seller can hold the other 5%. So the whole 10% doesn't have to come from the buyer. Right? Now, the seller can hold more if you structure a deal that way, but as it relates to the injection, they can only hold half of it. The second way they help preserve working capital is a longer repayment term. SBA loans feature repayment of 10 years with no prepayment penalty throughout the life of the loan, right? As opposed to 3 to 5 years. When we look at debt coverage, and that's that relationship between cash flow and the proposed debt, SBA only requires a minimum coverage of 1.15. That's a lot more aggressive than what, again, today, a lot of traditional banks want to see 1.50. So they want to see a lot more surplus cash flow available. Credit requirements go as low as 640. And there's flexibility on collateral. Now follow me here, because this gets a little tricky. SBA will say collateral cannot be the only reason you're not making a loan, the lack of collateral. However, on the other side of the coin, they say if there is collateral, you have to take it. So naturally, the bank's going to take a lien on all business assets. But if that doesn't fully secure the loan, then you look at the personal guarantors, and anybody that's a 20% owner or more has to personally guarantee the loan. They're going to look at the personal guarantors, and if they have any personal assets, such as a home with equity in it, the lender's required to take a lien on that property. Right? Now that only applies for deals above 350,000. Under that, they still have the discretion not to take it. But on larger loans, if the collateral exists, you have to take it. Now, only about 10% of all the lenders that make SBA loans, only about 10% have what's called a preferred lender status, a PLP status. Essentially, what that means is because of the volume of the loans we make and the quality of our portfolio, the SBA has given us their approval stamp. So when we underwrite a loan and approve it, it's done. We can move right to closing. We don't have to, if you don't have that PLP status, you have to physically send the loan to the SBA. They underwrite it, questions go back and forth, and maybe 6 months later you get an approval. So the bottom line is, when you're talking to a lender, I would suggest you try to work with a non-bank lender because they're going to be more aggressive in that they maximize the attributes of the SBA program. And secondly, make sure they have a PLP status because they're going to be able to turn those loan requests around a lot quicker than a traditional lender. Now, sometimes an SBA loan's just not an option. Why? Well, every year the SBA, what they call their rule book is what they refer to as their SOP. There's always some minor changes. A couple of years ago, a seller could hold 100% of the injection. Today, they can only hold half of it. So that goes back and forth. I call it the pendulum that swings between 3 and 9. It goes back and forth every couple of years. Um, but some of the more recent changes they've made within the last year and a half with a new administration is uh, you can only make a loan if the owners of the business are 100% U.S. citizens. In the past, only the majority owner, 51% owner, had to be U.S. citizen. The rest could be um, Canadian citizens, green card holders. Now you can have no foreign ownership. Right? So another change they made and doesn't really apply to business acquisitions is merchant cash advances. SBA has issued a directive now that doesn't allow us to refinance merchant cash advances. So it really puts a lot of small businesses in a tough position. So because we are a bank now, we have the ability to take in deposits. Um, but so we now offer not in addition, I mean, SBA loans will always be our main product. We'll do over $1 billion a year in SBA loans. But now we have what we call commercial and industrial loans, which are non-SBA guaranteed. So we have the ability to make loans um, outside the SBA. Now, again, you're looking at a loan that no longer has that 75% guarantee. So you're going to look at the deal a little bit closer. Um, and you're going to look for, you're still dealing with a repayment of anywhere from 5 to 10 years. Um, Now we have the ability to go up to $15 million, but we're going to look, FICO is going to be a little bit higher, the debt service requirement a little bit higher. Instead of 1.15, we want to see 1.20. Um, and we want to see that there's a little more, I want to say, collateral tied to the loan request. And maybe a second on somebody's house, or if sometimes they have investment property or commercial property. And before our call started today, I was telling Liz about a situation yesterday in credit committee where we had a buyer of a business that was I'm calling medical durable equipment. It's the those things like my mother would push around. You know, has handbrakes on them and all that kind of stuff.
Walkers.
Yeah. So it was a good company. I mean, nice stable earnings, good stable profitability. Problem was the buyer um, had a great resume, relevant industry experience, but he only had a green card, so he's ineligible to do the loan as a SBA loan. If that condition didn't exist, not only would we have approved it on an SBA, but so would have every other lender that looked at it. It was a slam dunk, easy loan to do. The guy had good credit, good income. Um, so we were able to put that loan over in the CNI side and find a way to make the deal work without the guarantee. So it's nice to have an option. And our focus, when we look at these, we come to every deal with I'm going to say our SBA glasses on first, um, to try to see if there's a way to make it. So that's who we are and what makes us different. We do have a great technology platform that streamlines a lot of the process. We're pretty proud of that technology. But that aside, when you get ready to submit to the bank that you want to buy a business, now what we're going to talk about is how do you do that? I keep talking about you only get one chance to make a good first impression. So you want to start off by putting your best foot forward. One of the things every bank is going to ask you is a business plan. If they don't ask you that, then it tells you that they're doing this by the seat of the pants and they're gonna jump all over the place. You want to put a business plan together before they even ask you for it. Right? Now, what should your business plan address? First of all, is experience. You want to show the lender you have strong, relevant industry experience for the business you are buying. I can't tell you how many times I've seen somebody who's an accountant for General Electric that's trying to buy a restaurant. Well, just because you like to go out to eat to a restaurant doesn't mean you're qualified to run one. So even if you are buying a restaurant, you want to show that you have that industry experience, whether it's the front of the house, the back of the house. Now, sometimes your expertise is in the financial side of the business, the marketing side of the business. You want to show that, um, and again, maybe you're buying a business with your spouse, and you want, one spouse is good at this, the other spouse is good at that, but you want to show you have experience. It'd be amazed how many people buy a landscaping business. A friend of mine had a commercial cleaning business. He had it for several years, increased the revenue quite well, made some good money, and now he just sold it after 5 years. And he was telling me how concerned he was because the buyers had no idea what they're doing, no idea what they're getting into. And now he wasn't holding a note, so he wasn't at risk. But you want to answer that question. Now, I'm going to tell you something as an internal that's again, I've been doing this a long time. What's prevalent in the banking industry is underwriters tend to be critical, tend to be the glass as half empty, just by their very nature. So when you put something together, if you leave room for them to read between the lines, and if they have to assume something, they're going to assume it with a negative spin. It's just their nature. I'm not talking about one bank versus another. I'm telling you this is their nature. So my tip to you is don't give them an opportunity to put a negative spin on something. Answer the question before it gets asked. Give them all this information, and you'll see as you go through the points of the business plan, they'll just flow through the business plan. You're answering the question before they get to ask it. They never have the opportunity to put the negative spin on it. So by the time they get through the business plan, they should be on your side. All right. So talk about experience. Now let's talk about cash flow. You want to show that the historical performance of the business you're buying demonstrates the cash flow to pay the loan back. Can you afford the payments? I mean, you got to be happy with that first before the bank is, right? So I'm assuming you're comfortable with it, but you got to be comfortable with it. Yes, there's some things you can add back when you look at the seller's tax returns, and I'm really suggesting you go off of tax returns. I've seen a lot of people get burned when the seller says, "Yeah, I have another set of books." Yeah, I've seen that come back and bite them more times than not. But when you look at that, there are certain expenses that the seller has that you won't incur. The seller's salary, maybe the seller is putting together some or puts some personal expenses, vacation property and things like that through the business. You want to validate that, but if you can validate that's a true personal expense that you're not going to absorb, yes, you can add that back into the cash flow. But you want to be able to come to the bank showing them that you understand the revenue and you understand the expenses. Now, what do I mean by revenue? It's not going to be the same amount month in, month out. There's going to be some months where you do better and some months where you do worse. You want to understand if there's any seasonality. You want to understand who their customers are. If you have one customer, if the seller has one customer that's 50% of their business, how long have they been working with that customer? What if the business loses that customer? So you want to understand the revenue, and the same thing with the expenses. Uh, will you be making any changes to the business model? Then you want to, once you've addressed okay, the purchase price and you can afford it, you want to see if there's going to be a working capital need. Now, yes, you take over today, tomorrow, you got customers, you know, buying the product and it's generating sales and but the same token, revenue or sales is not cash, right? Depending upon the kind of business you're looking at, you may have inventory that you have to sell, and then once you sell that, it creates a receivable and you have to collect the receivable. Well, how long is that conversion? Is it 30 days, 60 days? You want to build that in because in the meantime, you got payroll to make, you got to pay rent, you got utilities. So you may need to, in addition to the purchase price, add a working capital component that's sufficient to cover those expenses, right? You want to identify any trends. You know, is are the trends revenue going up every year, or is the trends of revenue going down every year? And if it's going down, you want to make sure you have that conversation with the seller as to why that's going down. Maybe it's because the seller is getting older and they're just not putting the attention into the business that they had in the past, or maybe it's because of competition. The third component of any acquisition, so experience, cash flow, is credit. Usually how somebody handles their personal credit is a good indication of how they'll handle their business credit. So what's your FICO? Have you demonstrated good credit habits? And then lastly, I'm telling you, when you talk to a bank, the first thing they're going to ask for is what collateral do you have? I'm telling you, you go to a real business acquisition lender, uh, that's doing it under the SBA program, cash collateral is going to be the last thing they ask for. Now, like I said, if you anything above 350, SBA requires us to take a lien on anything that's there. We can't leave any collateral on the table. Um, Now, if there isn't, maybe there's a house, but it's leveraged. There's a mortgage and home equity, so there is no equity. What SBA says is you can't leave collateral on the table, but if there isn't any collateral, then they can check the box and say, okay, I've taken all available collateral. Now the lender is free to make that decision. Now for us, we'll take the collateral if it's there, but if it's not there, as long as we got good experience, good cash flow, we're good with not requiring any collateral until we get up to maybe 2.5 million. Once I get to 2.5, 3 million, I want to see something. Right? And if there isn't anything, then we'll look to say, well, have you talked to the seller about maybe holding a seller note? So instead of doing a biz act for 2.5 million, maybe you get the seller to hold, or instead of doing a loan for 3 million, maybe you get the seller to hold a note for 500,000. That brings our loan down, and then we're okay with dealing with the lack of collateral. And again, some points you want to address in the business plan: what the business does. Again, don't be specific. Don't be abstract. You don't assume the bank knows. Of course, they know what this type of intermediary does. Don't assume they know anything. Spell it out. Here's what the business does exactly, where it's located, what's nearby. If you're a retail business, you're in a plaza, what other tenants are in that plaza that's going to attract businesses into your store? If there's a lease, it needs to be 10 years because that's the term of the loan. So you want to ask how many years left on the existing lease and will the landlord extend it? One of the things I always caution buyers in is when they get ready to do their physical inspection of the business, you want to look to see if there's any equipment that's involved in the purchase that's old and may need to be replaced. Last thing you want to do is borrow $1 million, buy this business, and then a month or two later realize you need to borrow another 300,000 to replace some equipment that should have been taken care of at the beginning. So you want to do that at the beginning so you can put it all into that loan. You want to make sure you talk about the skill set you bring to the table. What do you do that you're going to bring to take an already successful business and ensure that it continues to be successful? And then lastly, every loan has strengths and weaknesses, right? It can't just be all positive. So you want to come to the bank and say, these are all in a summary, these are all the strengths and why we think this will be successful. But there are some risks. There are some weaknesses. I mean, there is competition, but here's who the competition is. And this is why we think we're superior. The competition is 30 minutes away. The competition has limited hours, blah, blah, blah. But you want to show the lender that you've addressed all those facets of the business. So by the time they finish this, they're behind you. So, in summary, presenting an organized, thoughtful request improves the likelihood of your approval. You only get one chance to make a good first impression. Remember, I said the underwriters tend to be negative or negative Nancy's, and once they've gone down that path, no matter what additional information you supply them with, it's hard to get them to overcome their original thought, right? So you want to essentially answer the underwriting questions before they get asked. Working with us gives you options. Obviously, we're going to try and go down the SBA route. First and foremost, that's our golden goose. We lend over $1 billion in SBA loans a year. And again, even though we're a bank, our history is as a non-bank lender, and that's what uh, we do. We maximize the attributes of the SBA program. But if it doesn't fit the SBA program for technical reasons, now we have a couple options. I remember looking at a loan maybe 6 months ago, and it was a large one. I mean, because SBA only goes up to 5 million. So this tended to be a large loan, maybe a $12 million acquisition, but it was an existing business that was buying this business. So yes, we had industry experience. We had good cash flow, both from the buyer as well as the seller. But because this was a seasoned business, and they did have a lot of collateral. They had commercial real estate, they had residential real estate that they could pledge. And by doing so, we could then take that loan and put it over a 25-year term as opposed to a 10-year term. Obviously, the longer the repayment period, the lower the payments. The lower the payments helps preserve working capital and enhance cash flow. But in addition to what we like to say at Newtek is we're here to help a business grow, help them reduce their cost, and help them reduce their risk. So in addition to providing capital in the form of loans, we also provide a few other services: business deposit services with no fees, insurance services to help to get the best coverage for the cheapest cost, credit card processing, so you can manage your payments with real-time reporting, payroll and HR. And these are all services that a small business needs. We provide the same thing that Paychex and ADP does, but obviously at a much cheaper cost. And then IT and technology that's both secure and scalable. So that's a lot of information in a relatively short period of time. And now my voice is getting a little hoarse, so I think I'll open it up to questions and see if I can answer anything.
Thanks, Bob. And as he mentioned, the slides will be provided. Um, and we have Jacob asking in the chat for your C&I loan. What's the typical equity injection on that one? Or
Same
C&I?
thing, just 10%.
Oh, it is. Okay.
And again, seller can hold some of that.
Okay. And so what's the typical biggest kind of oversight that you see the packages coming in? I know you mentioned it already, but what is the most common mistake that you see buyers making when the packages are submitted?
I'm going to say the lack of detail. And I don't mean when I say a business plan, and you can buy business plans and they come in 2 inches thick, right? But you read through them and they're telling me as the reader, they're telling me the same thing 5 times. I'm not looking for that. I'd actually rather see the buyer put the business plan together themselves because something happens between here. I used to say the paper when you write it down, but when you type it out, something happens between there, and you become your own devil's advocate. You see the weaknesses when you put it out in front of you, and you say, "Oh, geez," So address those issues that I talked about in the business plan. Don't assume the bank knows this. Don't assume the bank knows where Temecula, California is or what's around it. All right. You want to try to be, and I'm not saying, again, don't write a novel on each section, but
Mhm.
certainly address those issues. When you look at the cash flow, look at the cash flow. Show the bank you understand the revenue, you understand the expenses, and that not just on an annual basis that there's enough cash flow to service the debt. One of the things we're going to ask you to do is put together projections. So yes, we have historical performance in terms of the seller's tax returns, but we're going to ask you to put together projections. And in those projections, we want you to do it on a monthly basis for the next 2 years. What does that show us? Is that you've addressed seasonality, if there is any. You've addressed the business is going to grow from $1 million a year in revenue to $3 million in revenue. And here's the expenses. But here's the other thing. Your revenue comes in different levels, up and down, but the same thing happens with your expenses. Maybe your insurance has to be paid up front for the year, or maybe it's quarterly. Then you have your payroll, um, and taxes. And it's not uncommon to look at your monthly performance and see, you know what, some months I do really well, profitability wise, but there are some months I'm actually in the red. Well, that's not a bad thing, especially again with their seasonality, right? It shows us if you've recognized it and if you've addressed it. Now, maybe how you're going to address it is you have some personal resources that can take care of those short-term working capital needs, or you come to the when you put your loan together, you say, I need a $500,000 term loan over 10 years, and then I want a $200,000 line of credit. Right. So one of the programs SBA offers is what's called an SBA Express loan. So that's similar to the term loan, but for the first 3 years, it's revolving. So you treat it like a line of credit. Then after the end of 3 years, whatever the balance is termed out over 7 years. So what's nice is if you have a little revolving piece to the loan, and what we typically do now is when we approve a term loan, we at least automatically approve a $50,000 line. So you just got to see how much you need available. But what's nice with the revolving facility is you take down on it when you need it, but then when those receivables come in, you put it back. So it's always there. Don't go just because you collect on that receivable. Don't go out and buy a fancy new car, because then what's going to happen is couple months later you're going to need you're going to have some
Right.
receivables out there again. So a line of credit should be short term, self liquidating. So whatever the purpose for what you borrow should be what pays it back.
Yeah, absolutely. Dan, I do see your hand, but there was a couple of quick questions in the chat first. So from Matthew, for the debt service coverage, do the past 2 to 3 years have to exceed the threshold, or is it forward looking?
Well, what's nice with SBA is for an existing business, you can look backwards in terms of historical performance, or you can look forward. But for a business acquisition, we look backwards. So one of the things I pointed out in the cash flow is you want to see that the historical performance from the seller can support the proposed debt service. Now, you can add back to their cash flow one-time expenses. Right? Maybe they had a lot of leasehold improvements one year or something. So you can put that back in. But You as a buyer want to be able to show us that this is not a startup. There's a difference between acquiring an existing business versus starting up a new business, right? Now we fund startups as well, but obviously when you're lending to a startup, you're relying on projected cash flow. There is no historical performance, right? Or if the business you're buying has cash flow, but it's all negative, if it's poor performance, you may be showing me, yeah, but once I take it over, we're going to start making money. Well, I'm going to tell you, well, then that doesn't qualify in the SBA eyes as a business acquisition, but I still would be interested to look at it as a startup. Now, as a
Mm,
startup, I'm going to take some of those things I talked to you earlier about and dig even deeper. So when I talk about relevant industry experience, yeah, I mean that's got to be proven. I got years of experience in this industry. I have contacts. I have not just contacts. I have potential contracts from buyers or businesses that will use my services. So now when I look at your projections, I can sink my teeth into them. There's some credibility behind it. But again, one of the things I see when somebody comes to us is, why would you want to buy this business? It, you don't have the ability to make the loan payments. And again, remember what I talked about collateral. If it's there, we have to take it. So you may be putting your house on the line. I don't want to take your house, right? So you want to make sure this works for you first and foremost before you bring it to the bank.
absolutely. Dan, do you want to go ahead there and then we'll go back to the questions in the chat?
Yeah, sure. Thanks, Bob, for your time. So, as a Canadian citizen, I know the SBA is off the table. So, for the CNI side, if I had, say, like a U.S. Citizen family member as a co-owner, is that a structure that you'd look at? And what would the deal need to look like?
Yes, typically we want to see that the U.S. citizen controls 51%
Mhm.
of the business. Um, but then secondly, we'd probably there's room to make exceptions if our collateral was here in the U.S.
I see. Yeah,
Okay. So yeah, because we get a lot of businesses that operate on both sides of the border.
right.
And actually, that again, I'm giving you more knowledge about SBA than you'd ever care for. But one of the programs with SBA is something called their ITL, their International Trade Loan Program, which encourages U.S. businesses to do business in foreign countries, including
Mm.
Canada. So if we can show that the loan proceeds is going to help a business, whether it's in Europe or in Canada, they actually increase their guarantee percentage from 75 to 90.
Oh, wow. Interesting.
Good to know.
Great to know. Thanks, Dan.
Thanks.
From Marty here in the chat, does Newtek refinance other loan groups, not MSCs, MCAs, with SBA lending?
Oh yeah. So probably today, I'd say one third of the purpose of our loans that we see are business acquisitions. And that's because, you have so many baby boomers. And I think the pandemic was just the straw that broke the camel's back. They're just done. I've been doing this for so long. But it's not just the baby boomers who are selling businesses. We're seeing e-commerce, um, a lot of opportunities there. But probably the second largest purpose for SBA loans is refinancing debt. Now, sometimes a business will start up and they do it with credit cards. But then once the business is up and running, they want to refinance that and put it on a more traditional term. Sometimes maybe they were able to get a bank loan. I mean, I'm amazed when I look at a debt schedule where they show again, Wells Fargo or whoever it was. Uh, they'll show the bank the original amount borrowed, the interest rate, and the term is 3 years or 5 years. And maybe they've been making payments. We can't refinance delinquent debt. Maybe they're making payments, but if I refinance that debt, that same debt, and put it over 10 years, look what I'm saving them. Two, three, four, $5,000 a month savings. 5,000 a month is you know, over 500,000 a year in cash flow savings. So now nobody's asked, but you're going to say, yeah, well, this sounds too good to be true. What's the interest rate? Well, on our C&I loans, yes, there's less risk there because you're looking for more stability with seasoned borrowers with maybe a little bit higher threshold or metrics in terms of credit and cash flow. And it's a shorter repayment period. So those rates are low. Those are in the low 7% range. The SBA, their rate is prime plus 3. So that would give you a rate of 9.75% today. And it's a variable rate. So as rates go up and down, your rate goes up and down with it. Obviously, rates have been on the downward cycle. They never go down as fast as they go up. But still 9.75 is not a bad rate. You see credit cards in the 20% range, MCAs in the 30, 40% range. So refinancing existing loans, putting them on a longer repayment term, your rate may be a little bit higher than what you were paying, but the big benefit is that longer repayment terms. Now, if you're refinancing commercial debt, if you have a commercial building for your business, we can't do apartment buildings or anything, but if you have a commercial building, you can refinance that. That would put it on a 25-year term.
Going that way. Thanks, Bob. I just want to get down to Les's question here, and then I've got another one to throw in. How can a borrower best limit the personal guarantee that lenders want? Is it just a
You can't.
negotiation and something we can address
You
early?
can't.
You're
Right.
like,
Yeah, it's just, and I'm pounding my chest here as I say this. And I don't mean it as a joke, but you should take the requirement for personal guarantee as a compliment. Now, everybody thinks that, yeah, but if I personally guarantee it, I have to have the assets to back it up. No, that's not. As you can see with the SBA program, we may or may not take collateral. What we're looking for is we only lend to an owner-operated business, right? So we're not going to lend to somebody that owns a retail strip plaza, because he's just collecting rents from the various things. But if one of those tenants is a retail bicycle store, we'll lend to that store. But I want to know the owner of that store has his finger on the pulse for that business. He has retail experience. He's going to make he has the operational expertise. So I'll use a restaurant as an example. If the loan defaults and I had to go in and take it over, or even if I stepped in earlier, I'd run that thing in the ground in 2 months. What do I know about running a restaurant, right? So the reason we require that personal guarantee is operational expertise, right? So take it as a compliment. Obviously, I mean, General Motors, yeah, they don't personally guarantee it, but when you're a publicly traded company, if the CEO of General Motors walks outside and gets hit by a bus, they got somebody in his chair in 20 minutes, right? So you can replace that. But how do you replace the owner of that bicycle store? He's the business. He knows the community. He knows his customers. You can't replace that. So
can it
unless
be?
you're publicly traded, you're not going to get away with it. Every lender is going to require a guarantee.
And can you reevaluate that on an annual basis? Can it be reduced over time, or is it there for the term of the loan?
Term of the loan.
Term of the loan. Okay. Thanks, Bob. We have had some other conversations and past sessions about investors. And it's come up as well more recently that investors, if there's anyone on the cap table who has had an SBA default previously, they can't participate in an acquisition. Are there workarounds or how is the SBA looking at investors?
So SBA does allow for investors, but as I noted earlier, anybody that owns 20% or more has to personally guarantee the loan. So if you
Mhm.
do have investors help you, with the funding or some of your injection, make sure you keep their ownership under 20%. Now, we always have the right as a lender to require somebody as a guarantee if we think they're key to the success of the business. So if my wife is, she's going to be a 85% owner of the business and I'm only going to be 15%, but she knows nothing about the business that we're buying. I'm the one who has all the experience of really going to run it. Well, then my expertise is key to the success of the business going forward. So the lender would require my guarantee. Now, so if you do bring in investors in, keep it under 20%. Now, SBA does require us to disclose 100% of the ownership, again, for the US citizenship requirement. But
Mhm.
in doing so, we also have to run a CAVERS to ensure that they've had no default with the SBA. So if there is a default, that stops the process with SBA until that default is cured. So if they can go back and pay the balance, but if they don't, then the only other thing I've seen is where they eliminate that person's ownership,
And
right?
take
And
them off.
somebody else takes it. And then the third alternative is if it's a strong deal, we can look at it on the CNI because obviously we don't care what SBA says.
Okay. Thanks for the clarification there. Bob, go ahead. Bob Rowe.
Thank you. Thanks, Liz. Hey, Bob. I have a question to better understand the new rule with kind of what we were just talking about there with non-US citizens and the SBA. So just to give you a scenario, like I'm a US citizen. If I were to get an SBA loan, am I not able to take on any equity investors that are non-US citizens? So like could a Canadian citizen invest 5% equity in that deal? Is that completely out of
It
bounds
would
now,
it
or
is completely out of bounds if we went the SBA route. It is
right?
not completely out of bounds if we went the CNI route.
Okay,
So
so
if
it's
it's a
not.
strong, so if
Sorry,
it's
go ahead.
if it's a strong deal, we got good cash flow, good buyers, good experience, good credit. We'd look at that um, on the CNI side as opposed to SBA.
Okay, so the new rule is strictly like 0% non-US citizen.
Zero.
It's not
Yeah.
less than 51%. It's
And we all
they cannot be involved.
This is a big assumption, but assuming there's a change in administration a couple years from now, we know that rule is going to change again. It was
Right. Yeah.
in the 40 years I've been doing this, we've never had this rule. The SBA
Yeah.
has always allowed for foreign ownership.
Okay. Thanks for answering. Yeah, I wasn't sure. I wanted to clarify specifically, so I appreciate that.
And we're from a selfish standpoint, we'll do $1 billion every year in SBA. That's pretty much a given. We've only had this non-SBA program, the CNI program, for 3 years, and believe it, we'll do over a $500 million this year in that program. That's where we see the biggest growth over the next few years, being able to do something different than most other lenders. I encourage you to, if you're going to go the SBA route, talk to a non-bank lender because their program metrics are going to be more aggressive than traditional lenders, including Bank of America. Bank of America could say they're going to do it as an SBA program, but they can add layers to the requirements that are over and above SBA's. So they may want to see a debt coverage ratio of 1.25. They may want to see a 20% injection, right? And still go the SBA route. So, but again, the traditional lenders have all those deposits. So deal with non-bank lenders, they can be more aggressive. But when you do that, somewhat generic, they're all going to tell you the same thing. 10% down, here's a 1.15. So I used to speak at something called the IBBA, the International Business Brokers Association. And what I'm saying is somewhat generic. There's not a whole lot of differences between the lenders. Maybe how fast they can process the loans is probably one of the bigger advantages. But their interest rates are all going to be the same. The loan amounts and what goes in determining those loan amounts is all going to be the same. It's how you present your package that leads to not just an affirmative answer, but how quickly they process the request. There's not a lot of back and forth. Okay, get me this, get me that, get me this. If you provide it all um, in an organized fashion, you'll
Speed
you'll be
things up.
impressed.
Speed things up. Well, I just want to take a moment and share with you guys an easy way to access Newtek. So let me just share my screen for a second before we wrap up today. So if you've never been in Village Wealth, this is the deal dashboard. So you can see on the left-hand side here, I've got my tabs, my deals. That's the deal dashboard. You've got the marketplace. So that's where you can find listings. But once you find listings and you're looking at a variety of deals, this is where you're sort of staying organized and managing all of that activity, you know, back and forth from brokers and that kind of thing. So I'm going to open up this deal I've got stored here in Utah. And so this might be a business that I'm considering. I've got my data room here and documents, but I want to take you into the deal structure calculator here where you can start to run your modeling. So this tool allows you to run your calculations. When you talk to someone like someone from Newtek, not Bob, because Bob's behind the scenes these days, but when you get in and you're chatting with them about, you know, interest rates and you're getting the information about how to plug in, if you've got shareholders, you can model that, any seller financing, and it'll help you calculate whether the deal is bankable or not, and show you your credit metrics to see if this deal is going to get through with the lenders, and what your return is as well. But right here, you can see this button, get pre-qualified for financing. When you click on that button, it's going to take you directly to a portal to Newtek. And so if you're in the US, I'm sorry, this isn't available in Canada yet. For Canadian loans, you can chat with our team. Eamon Gamble's here, and he assists in helping our members get through their lending in Canada. But in the US, we've got this nice little button that takes you through the Newtek's flow. And you can access it right from Village Wealth and the marketplace as well. There's a couple different places. So it's the easiest way to access Newtek when you're looking at a deal in the US from our platform. So thank you, everyone, for joining us and staying with us for the hour. Thanks, Bob. We'll definitely have you back in the next couple of months. So if there were any questions that weren't asked today that you want to send over, we can make sure those are covered in future sessions. Next week, we have Grant Hensel coming in from Entrepreneurial Capital. Again, they're a co-investment group in the US, and they also invest in Canadian deals. So if you're considering raising capital or you're an investor and have other questions about what's going on in the ecosystem, please join us next Friday. You can sign up on Eventbrite, same place you signed up for this session. And I'll wish everyone a great weekend. And Bob, thank you again for joining us.
My pleasure. I wish you all the best and continued success.
Thank you so much. All right. Have a great weekend, everyone.
Take
Take
care.
care.